your thoughts and how you're going to deploy capital. So on macro, for example, I think the big challenge that we're observing many of our clients face is how do we deal with fixed income? We've got countries in Europe with negative rates. Switzerland has negative rates, right? We're not talking zero, we're talking negative. How do you justify going into this when the wisdom is 60-40, right? So you've got to come in, there's got to be some way of rationalizing this and explaining to clients so that it does make sense in the end, whether it be macro views or whether it be a more micro set of views on particular segments. You can imagine the environment now is actually a really serious topic. Most of our clients describe it as top of the agenda, and it's in multi-year plans, and it's discussed with every client meeting. How do you go to clients that actually take it into account intelligently in a way that you can measure and implement? And this is where tech makes it possible today. And Chris, you and I were talking about this 20 years ago. We were only dreaming that this might be possible. It's a little bit like people talking about iPhones before they existed. I guess today in finance, the same things, right? And now you're basically able through tech to simply do these things and connect the math to clients in a way that would have seemed unimaginable before. And the last thing I'd say, which has been wonderful, is that the world has made this so much easier because of things like the cloud and all this huge computing power that we've got. I mean, to give you a sense, we think that Alpima before in the 90s would have needed 10 times the number of people to run, if not more. And today we can do all this good work with much more agile, lean teams.
Right. Well, building on what you mentioned earlier, Pierre, about negative rates in Europe, right? It's not just in Europe, in Asia as well. Negative rates in Japan. And
absolutely, of course.
One macro factor that I'm very afraid of is, will there be a negative US dollar interest rate in the American market, right? And now I'd like to go back to Larry to make some comments about the possibility of a negative US dollar interest rate in the United States.
Great. Yeah, thanks. And Christopher, don't be afraid to ask me later about things that Pierre just mentioned, because touches on some work that I've done too, and I'm really fascinated to explore that a little bit with him as well. If
Absolutely.
Yeah. Negative interest rates in the U.S. Well, Pierre has mentioned that Switzerland has them and has had them along its yield curve, out to a 10-year bond issuance. Germany has as well. Policy rates have been set at negative levels in various countries, primarily in Western Europe. Would the Federal Reserve do the same? So we'll start first with the policy rate. At the moment, it seems unlikely, and I would say actually pretty unlikely or highly unlikely. The Federal Reserve has made a pretty strong case over the course of this year, and to some extent had touched on it in earlier periods as well, as to why negative interest rates were unlikely to produce benefits that would outweigh the costs. And the costs are largely borne by the financial system broadly, that would include banks, but also by other asset gatherers and who have to invest, or at least have to invest largely in fixed income, like, for example, insurance companies and pension funds. But it also punishes savers and pushes them potentially into risks that are untoward. That is, that they shouldn't be assuming themselves given their own circumstances. The Federal Reserve has believed instead that through both asset purchases and what they call forward guidance, that it can reduce real interest rates. And most recently by trying to change people's expectations of long-term inflation by adopting as an objective an overshooting of its inflation target. Remember, I guess in the world of economics, what central bankers are trying to do is to push down the real rate of interest, the real cost of borrowing, to facilitate investment and to some extent also spending. And so they feel that they have tools. I will say, though, before I leave the subject of policy rates, Federal Reserve has also been emphatic as a central bank, as an independent central bank probably can be this past year, that in the current circumstances, fiscal policy really has to play a big role. And they've been big fans of both the first fiscal stimulus package and in their own way have been trying to prod Washington, the rest of Washington, into adopting a second one, despite the advent of a vaccine. Long-term interest rates, at least at intermediate areas of the curve, potentially could go negative. In other words, market forces could drive them there. And that's what's happened in Europe. In other words, you don't have long-term interest rates negative in Europe simply because short-term rates are negative, but also because of very, very strong demand for those instruments from the financial sector primarily. And there are scenarios, I think rather unlikely, but there are scenarios where the same thing could unfold in the US. But I don't think that policy rates will go negative, to answer your question succinctly. Not in the United States.
Well, good to know. And so I think we can see that both Larry and I are very excited about the technology that Pierre is producing for investors, East Coast, West Coast, and globally. So if I can come back to you, Pierre, on this, I mean, could you give us a more concrete example of how the technology could be applied to like a private bank, perhaps Julius Baer, or maybe a hedge fund or a mutual fund, with a little bit more sort of like, concrete example?
Sure, no, of course. The common thread across all the clients is that they basically want to digitize the process of creating portfolios, visualizing them, and deploying them to clients. That's really the one big problem that people are trying to solve, especially when you've got a legacy business that has some scale to it. And so the way this happens in practice, our platform is used to basically help people build portfolios quickly, test them, and then deploy them. And once you've got this, you can basically shape them over time and manage them in a way that is a lot easier on a SaaS platform than it would be on spreadsheets, which typically mean that you've got, as you know, spreadsheets tend to mean more people and error-prone processes and things. So that's one big use case. The second is visualization, where you can have managers that have a special skill into a particular asset class, like fixed income, and you want to be able to show to your clients that you're doing something special. And unless you are able to show this clearly on dashboards that show the right metrics, it's very hard to make a case. Because if all you have is a Bloomberg chart of performance, that may not come across with the real story when you want to talk about credit ratings, yield to maturity, and more granular information. You want to be able to somehow show that you're correlating negatively to certain things and things that matter to your clients. So visualization is very important, and then also allowing people to customize their offering or to combine their product range into portfolios in a way that is very simple. So that's where, yet again, technology can allow such things to happen in real time. Whereas before, you would basically need to have a discussion, someone would do some work, come back to you with a PowerPoint. Today, that can happen in seconds. And I'd finish with one more thing, which is custom indexing. So the notion of creating something completely bespoke, the kind of thing you and I did back, in the day in the industry, that took a number of people, typing on keyboards. Today, you can do this extremely simply with either a notebook kind of interface where people program what they want to do, or a GUI that allows people to click buttons. And as you do that, code gets written automatically, right? So that's the big change versus 10 or 15 years ago. Basically, you enable thought to become an action, and an action becomes code immediately. And then you can launch a product when you're happy that you've analyzed it properly. So that's broadly what we help our clients with. And I guess the one thing that's super exciting to me is that this is only the beginning, because it's all about connecting thought to action, and giving the information to be able to judge better. So it's not necessarily because you want people to make quicker decisions. You want them to make better decisions. But in order to make better decisions, you've got to go through a number of cycles a lot quicker. So the speed comes into the iterative process that takes place as you're exploring things, right? It doesn't mean that all of a sudden you want people to trade daily. No, it means that when you make your investment decision on a monthly or a quarterly basis, you've had so much more data to look at so that you can make a better decision. That's really what it's about. And it's about helping clients across the value chain so that you're able to give this sort of intelligence and transparency much deeper than you were able to before.
Yep. I love custom indexing that Pierre mentioned. So we've spoken a lot about interest rate market and also the global macro piece, So we turn to stock market a little bit because a lot of our, I think, attendees here are very interested in the stock market. And so, I mean, maybe my basic question to both of you, and feel free to add to it a little bit more, is do you feel that the current public stock market is a little bit disconnected from the real economy, given what we've seen in terms of valuation and also the loss of businesses in the corporate sector? Perhaps I can start with Larry first, and then move on to Pierre.
So it's a very good question. And I think the honest answer is there's some disconnect, but maybe not as great as many commentators would suggest. We do live in this unusual world where the broad array of fixed income assets, government bonds, corporate bonds, mortgage bonds, and many others simply don't offer very attractive either coupon payments, that is the interest that you would earn on holding those instruments, And even less so, they don't offer the possibility of attractive total returns through further price appreciation, given how low, even negative, interest rates are these days. So the expected returns for most of us, I mean, one can disagree with this, but for most of us, look decidedly unattractive across most of the fixed income universe. Doesn't mean it has to be jettisoned, but it does mean that more and more people will be looking elsewhere. And that has, of course, propelled equity markets to some extent. When you, though, look within the equity markets themselves, what you tend to see, though, is quite uneven performance. Investors, especially in 2020, but even before 2020, have generally flocked towards business models that are compelling. Compelling in their ability to either produce above average long-term returns. Large cap growth is in that space. And at times also in business models that just were very sound at delivering current cash flows. Almost everything else, though, performed decidedly less well. And so for those who sort of follow at the broad level, growth massively outperformed value. Large cap massively outperformed small cap. Emerging markets, by and large, fell by the wayside. I mean, again, there are exceptions in sub-periods, but those things have been true. And if you look at the valuations, whether it's price to earnings multiples, price to book, or other valuations, they generally also reflect that. The U.S. market may look expensive, but there's skew in that data with a relatively modest number of companies with very large market capitalization skewing the data of the overall average, and certainly of the smaller cap universe. And globally, that's also true. You wouldn't necessarily say at first glance that European equity markets or even most emerging markets look to be as expensive as the U.S. has. So there's been a very differentiated performance. And what that means looking ahead is that if we go back to the original conversation about an improving economy on the basis of effective control over the pandemic, then there is the opportunity for what in the parlance we call rotation to begin to add perhaps to successful winners, some of those that have been overlooked or left behind. And those of you who sort of follow the markets on a more regular basis will know that in recent months, that's precisely been the flavor of global equity markets, that we're finally beginning to see selective parts of the emerging complex, particularly those that are more exposed to trade in Asia, doing better than the rest. That we're beginning to see cyclicals in value and financials begin to pick up and small caps beginning to make up some lost ground. That, if it is really going to be the case, if my earlier fundamental assessment proves to be correct, that's probably going to be has room left to run in it. It can go quite far. It seems to me we should be closer to the beginning rather than to the end of that process. But as I said, much hinges again on that control of the pandemic and the ability to put people back to work.
Got it. Yeah.
Great.
Thanks for that,
Thanks,
Larry. Yeah.
Hey, Chris, we're running about 10
Sure.
minutes over, Chris. So we're going to have to wrap this up to get on the next.
Ask Pierre to also share some concluding remark, and then we will hand it back to you. I see a long list of questions from the audience, but I'll get back to Larry and also Pierre later on separately.
All right, super. I'll make it brief.
Thanks,
Thank you very much. I think low rates are having a very fundamental impact on portfolios, and we see this into the way portfolios are being allocated. So simply because people are taking views and shaping portfolio allocation tends to be favorable for equities. The second thing I'd say to this is we're also seeing ESG being a proper force encouraging people to invest further into equities. I'll just share one number with you, which I find is unbelievable, which is if you just look at the top ESG ranked companies, I'm using here MSCI as a bellwether for the measurement of that. Depending on how you allocate, you're basically anywhere between 70 and 90% performance year to date. And you could argue a lot of that is tech. The truth is, it's not just tech. So there's something fundamental going on, which is helping further equity allocation. But I'm going to stop here and say thanks. Hopefully, we've been able to cover some ground, but
thank you.
Obviously, I would have a lot more to cover if we had the time. Thank you.
Absolutely. We love to see you in Silicon Valley, and we love to see you here as well, Larry. So I know both of you make trips regularly to the West Coast, and please stop by and say hello to us and meet us in person. And hand it back to you, Bill, and also Karim.
Chris, thank you so much. Pierre, thank you, Larry. Thank you so much. It's been enlightening. Sorry, we are getting there to time. It's not your fault. It's ours, actually. Thank you so much for your participation. We hope to see you again when we have our next event.
Thank you very much.
Thank you.
And so it's going to be a pleasure, my pleasure, to introduce the next panel. And I apologize in advance that we're running a little bit late. But Greg, Elizabeth, Ethan. And so the way I'm going to start this panel is like, are you all familiar with the companies Ripple, GitHub, LedgerX, Twitter, Square, those familiar sorts of companies? Well, guess who's an investor, perhaps an early stage investor. And I think Pierre and Larry, maybe you want to take suck some brain cells out of Greg Kidd and improve it and put it into your machine learning capabilities, because he seems to know what's going to happen next. So Greg, thank you very much for joining us today. It's going to be interesting to put this trio of people together. Elizabeth with talking a little bit about perhaps Bitcoin, Ethan a little bit about Ripple X or some of these things that you're going to be talking about. And Greg, I'll let you make the introduction to the rest of your group there. Thank you so much.
Thank you, Karam, and welcome all. I have had a Forrest Gump lifestyle, but it's in part because of meeting people like my panelists today. I'm excited about the topic. I'm excited about the last panel. I'm from the Fed. I can't understand how we're living in an environment where there's been a lot of printing of money this year, yet interest rates are low. The equity markets are booming. I'm hoping in my Forrest Gump lifestyle that from Elizabeth and Ethan today, I might get a few more clues. These are the people that have helped educate me about the world. And I'm going to hope to hear from both Elizabeth and Ethan. They can both give a little bit of their backgrounds, and you can see why I'm looking to them as oracles for where the next rabbit is. I'd love to have their perspectives on, what's going on in 2020, and then I'm going to ask them to reach forward and talk a little bit about what they think might be going on in 2021. But with no more ado, let me just have Elizabeth first, and then Ethan just give a little bit of an introduction and background, and take it from there. Over to you, Elizabeth. Thank you.
Awesome. Well, thanks so much for having me. Thanks, Greg. It's always a fun time. Great to see you virtually. I know we haven't seen each other in person in a while. And it's really been a pleasure to have you as an investor and, an oracle of sorts. You really see the future. So as for my background, I'm the CEO and co-founder of a startup called Lightning Labs. We're building technology for Bitcoin called Lightning Network that enables scalability and speed. So if you think of the Bitcoin blockchain as a base layer, we're building a layer on top of it that enables instant high volume transactions. Before that, I taught at universities around internet and tech policy, the intersection of law and technology, and have been involved in the open source technology side of things and also Bitcoin cryptocurrency since fairly early days. So I've seen a lot of that evolve, and I'm excited to talk about the future and also how the past informs the future today.
Thank you.
I guess that's up to me then. Good morning, good afternoon, good evening, I guess depending on where people are tuning in from. It's great to be here. My name is Ethan Beard. Thank you, Greg. Elizabeth, I've been a longtime follower of your work, so I'm honored to be on this panel with you. So I'm coming to you from lovely Northern California. I've been working in technology for my entire life, which is now getting pretty extended. I cut some of my early stages of my career back at Google, where I worked on a wide variety of different products, and probably most notably working on Android kind of from the early days of building out that platform. Then I was at Facebook for a number of years, building the Facebook developer platform and how we work with partners around the world. Most recently have been at Ripple, working on a team called Spring, now called Ripple X. And we've been building out a platform for developers to build and use XRP, the cryptocurrency, really focusing on, I call it the money use case or the payments use case for cryptocurrency. And then I've actually, as of maybe 4 to 5 weeks ago, I've actually left Ripple and I'm working on a new startup that we're in very, very early stages on kind of wandering in the woods and exploration and prototyping, which is fun.
So thank you both. Let me go back. So Elizabeth, I think I'm going to have to credit you with the one who kind of taught Jack Dorsey about Bitcoin. Now, I could be getting, could be taking some liberties there.
I certainly talked to him about it, but he's also educated himself and has a lot of other folks that know about Bitcoin. But yes, we do have that contact in common, yeah.
But Jack and Square, and I, I was early on at Square, we were not into crypto at all. And yet now in this year, crypto seems to be coming into its own. I mean, back in October, I think Square bought $50 million worth of Bitcoin back at the cheap price of 10,000 a Bitcoin, and now PayPal has come in. So something is going on there, and something's going on at Ripple as well. I guess there's a new Flare network coming up. But basically, I'm just asking, is 2020 the year that Bitcoin and XRP go from being a speculative investment to a defensive investment? And is this the year that things go mainstream? Do you guys have a perspective on, I mean, every year people say, well, this is the year this thing's going to happen. But this year, it really feels like the level of interest I've heard from just PayPal and Square purchases of Bitcoin are more than what the miners are creating. And so that's just creating a net overall demand. And I've seen also for XRP, the trading volumes are off the map with this Flare network coming up. And so what's going on in 2020?
So that's a great question. And a lot of people ask about the year 2017. So I know this is a general investor audience, but folks probably remember the Bitcoin and crypto hype that happened in 2017. And there was a lot of media frenzy. The prices went up. There was the whole ICO, initial coin offering boom that happened. The way that I like to think about it is there was basically a mini 1999 moment that occurred. And in this industry, we have mini 08s and mini 99s that occur at a much smaller scale. So there was a big kind of spike up toward the end of the year, Thanksgiving, Christmas in 2017, lots of frenzy. You saw the Google search trends going crazy. Everyone's, sister-in-law or great uncle was asking and texting them about this kind of thing. And there was a lot of media hype. So, Bitcoin went up to nearly 20,000 back then. And then in 2018, it went down substantially. So there was a huge spike of interest and then it crashed. Now, we at Lightning Labs are actually building infrastructure. We're building, you could say, like a decentralized Visa for Bitcoin. So for us, we like to be able to actually have the time to build. And I will say it's a bit distracting when there's all this media hype and frenzy and the price goes way up. But what we're seeing in 2020 is substantially different. So the global macro climate is different. I know we heard a lot in the previous session around interest rates and how we have very low negative interest rates. In the community, there's this meme, money printer go burr. I don't know if folks are familiar with that. So you have money printing we've seen. We've also had, as you mentioned, Greg, this big influx of institutional capital and corporate treasuries, right? So there's actually a great bitcointreasuries.org site that's tracking a whole host of these treasuries. And we've seen, for example, Square bought 50 million of Bitcoin, Stone Ridge Asset Management bought 10,000 BTC. They announced that back in October, and we saw a whole host of these companies. There's one called MicroStrategy that put a huge amount of money into Bitcoin. So we're seeing a shift, I'd say, from 2017 frenzy to 2020, pandemic environment. We had something called Black Thursday on March 12th in the crypto world, where the Bitcoin price tanked. A lot of the DeFi assets tanked on that day, and then things recovered substantially. So what we've seen is later in this year, there's less frenzy, less hype, not a ton of media. But if folks have followed, say, the price of Bitcoin, it is back up to close to its all-time high without all the frenzy in this environment where you have institutional adoption. You had the PayPal announcement, which was a big deal. PayPal allows users to buy numerous crypto assets, including Bitcoin. And you have these treasuries. And then every day or week, it seems that there's a new major institutional player that's come out and said, we're interested in Bitcoin, this macro climate. You had Paul Tudor Jones and a whole host of those people. I will also call out Abby Johnson over at Fidelity, who got involved in Bitcoin years ago, I believe 2014 initially, and then they built out custody for Bitcoin and assets like that. So you have a whole host of this institutional adoption. And then you have the consumer side. Square's been selling Bitcoin for a couple of years. You have PayPal there. So there's been a lot of action that I'd say is different because it is more substantial and it's less of a trend that is just going to go away. And it feels like there's much more staying power than back then.
Over to you, Ethan. And I mean, against backdrops, I think this year was when we saw MoneyGram getting into the fray, things like the Flare network. Want to just give a little bit of perspective from what you saw over on Ripple land?
Yeah, 2020 has been a pretty strange year, as everyone's exceptionally aware with. Just tying into some of the previous panels, obviously, massive economic blip down and historically low interest rates, combined with deficit spending in the form of stimulus, which I think many would argue hasn't been enough, but really just kind of printing money, has been really good for the capital class with cheap money, not so good for the labor class with a lot of people out of work. But you take cheap money and low interest rates and printing of a lot of fiat. Turns out it's not a good time to be holding on to fiat. And you got to put that money someplace. The government's handing it out for free. You got to put it someplace. And so we're seeing that capital chasing returns all over, right? I mean, real estate markets are going crazy. Equity markets are at all-time highs. In the tech world, the IPO windows are open. We've seen Palantir and Snowflake. We're about to see DoorDash and Airbnb. We've seen the rise of SPACs. There's just money being poured into equities. And I think similarly, a lot of that is moving over into the world of crypto. I spent a lot of time thinking about like, what's the utility and what are the use cases for crypto? And I think the one that almost everybody has been able to hold on to from the beginning is really Bitcoin as utility, as a store of value, as a gold substitute. And I think what we're seeing in this time of massive fiat creation, that value proposition is really ringing true for everybody. And to Elizabeth's point, it's not just everybody kind of the crypto crazies, but really it's the institutions who are saying, where do I put my money? I don't want to keep it in fiat, not the way that the governments are printing it around the globe. And so are really those mainstream institutional investors moving into holding Bitcoin as a store of value. And then similarly, more and more things like whether it's PayPal or Square, really bringing that into consumers as well. When we think about what that does in terms of the kind of the crypto markets in general, I mean, the Bitcoin drives the crypto markets completely. I think I haven't checked in a while. I think it's roughly 75% of the market cap, maybe closer to 80 at times, of total crypto market cap is Bitcoin. And so what it means is that if you see any profit taking in Bitcoin, even just a small amount of profit taking in Bitcoin, it spills over into the altcoins. If you want to, if 2% of the Bitcoin market cap moves into some altcoin, that altcoin is going to jump. And so that's really, then you're seeing all these altcoin returns. Those returns, we've had Bitcoin returns, and then you see the altcoin returns. That just attracts more and more capital because people are just desperately looking for a return of any flavor, and it's hard to find. I think in the grand scheme of things, I still think that there are very few blockchains that are used for anything other than speculation. There's just generally very low utility and generally very little product market fit. In the tech world, we look for kind of consumer or enterprise demand for a product before we kind of take it out and get liquidity for the investors in that product. And we're not seeing that in a lot of places. I think like the two cryptocurrencies I hold are Bitcoin and XRP. Because honestly, I think the money use case for blockchain is the most obvious one. And there's really two things you can do with money. You can hold on to it, and I think Bitcoin is really great for that. Or you can use it to spend and payments, which I know Elizabeth's working to make Bitcoin much better for that. But I think XRP also is a very great currency and blockchain for just very fast and very cheap payments. And I think what we've also seen as the markets have been driven up, the increase in liquidity just makes all of these coins more useful. So, I haven't checked the volumes in a while on XRP, but the daily trading volumes in and out of XRP are so significant that if you needed to move, tens of millions or hundreds of millions of dollars through XRP, you can do it now, where those things weren't possible, kind of a year or two ago.
So guys, we've talked about it as a store of value. It's obviously knocking it out of the park. It is operating like digital gold. My question is, we've got this thing called 2021 coming up. We're still doing our payments through banks and card companies. And I know Elizabeth and her way with Lightning and XRP just through its sort of faster, more scalable rails. Both of you guys, we're still short of a world where we're seeing clearing and settlement between payors and payees, consumers and merchants, still not traveling over crypto, whether it's Bitcoin and Ripple or central bank digital currency or stable coins. Is there a point where we're going to get from this new store of value to where we're actually using it in the mainstream? And is that 2021? If it's not, like, how far out is it? What's the blocker? What else might happen that would be amazing in 2021? Not that 2020 wasn't amazing in itself.
I'm happy to start with that one. I'm certainly hoping that 2021 is way more amazing than 2020 was. So fingers crossed. Get rid of the pandemic, resume some sense of normalcy, improve the economy, all of that. One quick point I would like to make as well is, so a lot of people, when they say, well, why would you want, say, Bitcoin for payments? Why would you need cryptocurrency for this? Well, you're in, say, a developed country with financial infrastructure that works. But actually, a lot of the use cases that have emerged as of late are in the developing world, in emerging markets, where, if you want to send international payments, things aren't so easy. If you don't have access to, say, an American Express credit card or a Visa card. And for example, even this year in economies such as, say, Nigeria, large population, major African economy, Bitcoin use increased dramatically, in part, interestingly, due to what I believe was a dollar shortage. And that played into what was going on in the oil market there. But there was actually a vast increase in the use of Bitcoin, say, to pay suppliers in China, and a good amount of international trade where you could, say, send Bitcoin over 10 minutes with Lightning. That could actually be instant. So we've actually seen a good amount of adoption for real world use cases. You also have a variety of economies where their currencies, are massively inflating. Venezuela is one example that Bitcoiners love to use, but there are all sorts of other places where that's been happening. I know Turkey, Lebanon, and whatnot. So again, Bitcoin has been a very interesting, say, both store of value, but even for people that want to transact in these other economies that aren't just the developed economies. Okay, so 2021. One thing that still shocks me is the concept of bank holidays. At our company, sometimes I forget there's a random holiday and, US banks do not operate. And in the cryptocurrency world, we operate 24/7, 365, right? And, you can trade 24/7, you can send, the blockchain never sleeps. So I really think we need to take dramatic steps to get to that world, because the idea that, it can take days in the US to send an ACH payment or even a wire isn't always instant, and not everyone has access to those rails and that infrastructure. So one thing I expect to see, hopefully, is better approaches to transacting, say, even in fiat. I know, Greg, you mentioned both fiat on a blockchain, central bank digital currencies, but the idea that people are using paper checks in 2020. You tell that to folks in Europe, I know we have a global audience here, and they think that's insane, right? So the US is still pretty far behind. One. Second, what we're doing with Lightning is enabling developers to build on top of Bitcoin, and they can build payments, money, internet money into their applications. And we've seen all sorts of really interesting use cases. Everything from video games, in-game payments, tournaments. You can send money with chat. With Lightning, you can actually send, say, 20 cents with every chat message, but that actually adds up, and it creates a really interesting, there's a cool app called Sphinx that I'm using right now that does that. We're seeing you can earn money using Lightning. You can't, say, on the Visa network, earn money, as a worker. I can just go online and perform tasks and earn money. So we're seeing all these interesting new use cases that I believe will continue to emerge. Again, it's a global environment. The idea even of trading, right now, crypto assets, Bitcoin takes maybe 30 minutes between exchanges, if not longer, depending upon how many confirmations are required. So again, getting to a much more instant transacting environment for even people that want to trade and that want to use the financial use cases. And then another aspect that we're seeing a big demand for lately is earning returns. We heard a lot about the negative interest rate environment or zero interest rate environment. People are looking to earn returns, lend out their Bitcoin and crypto assets. We at Lightning Labs have created a product that enables users to deploy capital to this network and then actually rent it. It's not custodial. They don't actually give up custody. It's called Lightning Pool, and they can earn returns. And we're seeing right now rates, it's very early. It's, mostly developers, of 6 to 8% APY for people to lend out Bitcoin. So the idea that you actually can have a risk-free return on Bitcoin is something that is new and people are really excited about, especially in this macro environment. So I think we'll see more yield generating products and assets so people can earn returns on their cryptocurrency.
I can follow up on that. Yeah, Elizabeth, paper checks, to me, it's like the most inefficient API on the planet. It's literally like a paper API for how we interface with the various banking systems in the world today, which is pretty fascinating. When I look at 2021, I would say from a markets perspective, which I'm sure like some of you here, your friends and family are like, oh, should I be buying more, fill in your favorite cryptocurrency. And I'm always hesitant to give any advice there. I think from the market's perspective, cryptocurrency is still not driven by fundamentals, in the same way that anything, almost anything else that we purchase, we're either buying it, if it's a commodity because it has some ultimate end use somewhere, if it's an equity or a fixed income because it generates a return, or an equity because it, potentially gives you control. Slack was worth 27 billion or whatever it was because Salesforce decided it wanted to own it. So there's an aspect of control that comes with that equity, in addition to having a product and in addition to having revenue. Those fundamentals aren't there for basically any cryptocurrency. So it's very hard to look at the markets and really determine, like, should Bitcoin be at 20,000? Well, yeah, that's what the markets say today. Is it justifiable at 10,000? Sure. And it's also justifiable at 100,000. Again, I'm a long-term holder, so I'm a believer. And fundamentally what the technology is, but it's hard to really, I think, understand from a fundamental standpoint where the markets should go. I do think that store of value story will continue to be good, and it's going to continue to drive Bitcoin, and that Bitcoin will lead the market up, and all the rest of the coins will go up because of that. Greg, when you talk about payments, it is, to me, from a technologist standpoint, blockchain is clearly a much better technology for moving money than anything else that we have today. These are open networks that anyone can participate in. They're standardized APIs. So if you want to build technology, that's what you want to build on. You don't want to build on proprietary systems and closed networks. So it seems very clear to me that, like, eventually most money will move at some point over a blockchain. The real question is, like, where in the massive stack that any kind of payment runs through today, where that blockchain will take place and over what timing, I think is probably, it's very complicated. So it's taking a long time and certainly has a lot of unknowns there. I think from the Ripple perspective, Ripple continues to just make progress in driving enterprise software into financial institutions and really using XRP as a bridge currency to be able to go between the various fiat currencies in the world, because cross-border payments is just, of all the payments, probably the most painful, the most slow, and the most challenging. And where, again, Ripple is seeing a lot of success are with companies like MoneyGram that are focused on, small value, high volume transactions, such as remittances. And I would just echo what Elizabeth says, which is, in the United States, and we're very far behind parts of Asia and parts of Europe, but it's pretty easy to make a payment. But it gets very challenging as you start to get out into other parts of the world where the financial system is much less developed. I think the one other area that I'm just continue to be very enthusiastic around is in the area of stablecoins. When I look at stablecoins, to me, they look like the next generation of bank money. And I think that in the same way that the banks in the United States, in essence, create money very constantly throughout the day, the stablecoin issuers in some ways are creating that money. And I think the way that stablecoins get rolled out will definitely vary from country to country. So, we're seeing, for example, in China, a very kind of Chinese approach where the central government is really mandating a single stablecoin that they have centralized control over. In the United States, where we've traditionally let the private sector have a lot more control of the banking system, and then we've regulated that private sector to greater or lesser success, obviously, I really envision that the stablecoin providers, in essence, will become the new banks. I would envision a day when they actually will be regulated and be able to do fractional reserve when they issue stablecoins. So they can issue far more stablecoins than they actually have in reserve. It's in some ways antithetical to kind of the whole crypto world, the idea of fractional reserve. But it certainly is very efficient in terms of economic growth or just making an economy and making money move, as well as economic growth. So I would envision the stablecoin providers will also be regulated to maintain their solvency. I wouldn't be surprised to see them becoming consolidated and becoming part of the banks that realize that, what these companies have done is in essence created a much better banking infrastructures. And so, whether it's stable coins, using open APIs for moving money, like these will come to dominate the movement of money. And I don't think we're going to call them stable coins. I think we'll call them dollars. That's what they are. And as soon as you get the government providing some regulatory clarity, that's, I think, how we will all treat them. Which leads me then to the final point, which is we still are behind the curve globally, and certainly in the United States, when it comes to regulatory clarity and regulatory guidance around how to treat the wide variety of cryptocurrencies that are out there. We have some guidance on Bitcoin and ETH, that those are kind of the only two that have had any guidance, and even that guidance is fairly limited. I'm not sure whether I don't have high hopes that the incoming administration is going to make a huge amount of progress in that direction, but we'll kind of keep our fingers crossed, or maybe there'll be a Hail Mary in the next 30 days from some of the outgoing administration to put their stamp on some of the cryptocurrency worlds. Again, I wouldn't hold my breath on that, but I think that regulatory clarity is definitely a challenge for adoption.
Do either of you think there's going to be regulatory clarity with the new administration coming in? And do any of you think that, like right now, I can't hold any crypto at a bank. There still seems to be a divide. Do we actually expect anything in 2021 to move, either in terms of clarity or banks getting up off the can and actually being part of this rather than on the sidelines?
I mean, I'll start a little bit there. I don't expect anything to happen in 2021. It's with my new startup, I just opened a new banking account, and even just having heard that I had left Ripple, they were just like poking around, trying to find something to do with cryptocurrency. I assumed with the goal of wanting to deny me a bank account. So the banks are very, very skittish across the board. I do think that, I think next year we're going to see Coinbase go public. They've got a great business. They're printing money and truly has fundamentals, like they have revenue and likely profits. That business is risky in the sense that the revenue is tied to speculation on assets. But I think we will see it go public. And I think what's really interesting about Coinbase, I mean, one of the questions is it an exchange like the NASDAQ or the New York Stock Exchange, or is it a financial services company, like a PayPal or a Visa or something? And I think the answer is yes, which makes it a really interesting company because it brings both of those together. And so, I think to the extent that they can continue to gather in consumers that are using their products for more and more consumer-like services, whether it's making payments or whether it's loans or things like that, and not just simply as an exchange, I think the banks are going to see that as a threat, especially when you have a Coinbase that's likely to have a great stock run up and likely to use that equity to continue to expand and grow and potentially make acquisitions. That threat could actually make the banks realize they need to keep moving in this direction. Otherwise, their lunch is going to be eaten. And that may help drive some of the regulatory perspective.
Yeah, my guess is that the pandemic will take, the forefront in terms of the policy of the incoming administration. Also, our approach to regulating cryptocurrencies has generally been a patchwork approach because there are so many different agencies, and in some cases they're not always coordinating. And you have a court that makes one ruling, Bitcoin is money, and then Bitcoin is a commodity according to CFTC, and then the SEC has said, well, Bitcoin is not a security. Okay, well that's helpful. So and then you have the IRS's approach, Bitcoin is property, and so my take is that we likely will also not have clarity in 2021. I do think we may have one of the patchwork, agencies give more clarity, but it won't necessarily be overarching. I do know, Greg, that there was some recent developments from the OCC around banks being able to custody crypto assets. So hopefully, that will continue to be the case. But I don't think again, the nature of our government is such that I think it's going to continue to be a patchwork-based approach, and we won't have an overarching, answer.
Okay. Thank you both. I just want to go ahead.
We're kind of getting on to, we want to give Uphold their due. They're up next. You're welcome to stay on for the Uphold presentation, by the way, Greg, given your involvement. But I do have one question
for
the group, which is the prognostication question that we're kind of theming this conference over. When do you think the US dollar will become a digital asset instead of a piece of paper?
I think it already has.
Give a prediction of a year. Give a prediction of a year.
I think it already has. When was the last time you actually used a piece of paper?
Yeah, I haven't.
Right, me neither. I don't think anybody is anymore. So I think it's just a question of like, how good is that technology? And I think it's pretty bad, but there's constant room for improvement.
Yeah, in terms of any kind of CBDC coming from, say, a government, I would say it's more than 5 years out. In terms of banks issuing their own, say, you know, Citi USD or JP Morgan USD, I would give it something like a 4 to 5 year time frame.
Great. Greg, do you have a
I'm an investor in 2 attempts for, I don't want to call them tin pot nations, but small nations trying to issue a sovereign digital currency. I do think that the Treasury still will go and smack down those countries when they try to do it, because there's not an identity solution that goes with who can hold those central bank digital currencies. And it's tough if you have central banks in the process of issuing a perfect instrument for money laundering and terrorist financing. So while technologically it's possible tomorrow, I think your Elizabeth's guess that 5 years out before you can do it without having Uncle Sam come and shut down every bank that's in your country because you were associated with something that's going to compete with the Fed. And by the way, I used to run and work at the Fed and that check clearing system. We used to have Lear jets for flying those checks around. So I'm crying a little, you guys beating up on checks. You're taking away all my fun stuff. No people got to fly on those Lear jets, but those checks had a great ride.
Excellent.
And also,
I am hoping
as you mentioned, you do have USDC today and other assets, where you do have a quote unquote digital dollar. It's just not an official digital dollar.
Right.
You do. Yeah, it has been a digital dollar. But the idea that there could be a dollar where who's backing it, there's no bank involved. It's just between the user and the central bank itself. It kind of makes you wonder, what are you bankers going to be doing?
That's not the way the U.S. government approaches things. I think the U.S. government has too much close ties with the banking industry to have a direct-to-consumer product. They will enable the banks to issue stablecoins before they issue one themselves.
So too big to fail translates to too big to crypto.
Too big to not invite to your fundraiser.
That's right.
Okay.
I will cede my time to my compatriots at Uphold. Thank you very much, Elizabeth, Ethan. Thank you guys for Bill, for the opportunity to meet with folks today.
Thank you.
Thank you, Greg.
Thanks so much.
Thanks to all you guys. It was an excellent session, and you're certainly welcome to hang on if you want to for the Uphold piece as well. Karim, you want to take us back?
Yes, Elizabeth, Ethan, Greg, it was really fascinating hearing what you said, and I'm looking forward to our next event when we dive deeper into emerging countries and what they're doing with coins. Hopefully you'll join us or be back or have time in March when we'll be talking about more of that. But thank you so much for your time today. Thank you. I'd like to bring back Robin O'Connell of Uphold and Daryl Hawk. Some of you already know that JP was supposed to join us today. He just has a personal emergency. He does send his apologies. He was looking forward to it, could not join. But Robin stepped in and Daryl Hawk. So it's interesting, the transition. We talked a little bit about Uphold this morning. There are one or two burning questions for Uphold that I've been being badgered with. But we can go quickly to that, or we can get to Daryl, and this is going to be interesting because as you see the transition of the events that we've been having today, it's sort of building on each other, and what Daryl's, how his company and what they do in the terms of security and blockchain is just a natural extension to the conversations that we've been having today, which is quite amazing. I'm going to ask your kindness. We are running a little bit behind, so if we can, we've got if Daryl, we can give some airtime to Daryl to introduce himself and the company that he works with. We know a lot about Uphold. Give me 1 or 2 minutes at the end for a question that's still pending for you, Robin. But if we can run this panel a little bit shorter than normal, I apologize.
Great, that works well. Thanks for having us. We're really excited to be a part of this. So a quick introduction to CertiK is that we focus on, as mentioned, the security side of things. So we try to provide end-to-end security for correctness of source code. So we're one of the top auditors in the space. We've audited over about $10 billion worth of assets thus far. So a lot of stable coins, a lot of crypto that's trying to achieve various aspects of use cases, whether it's NFTs, stuff like gambling, or the more traditional use cases as well, DeFi, of course. And so we also, when we looked at end-to-end security, what's also relevant to a conference like this, a panel like this, is we have introduced a new product that brings on an insurance-like system, because if people are going to be holding crypto for the long term, then there are a couple of concerns, one of which is the actual crypto that I'm holding secure? So is the code done properly? Is it hackable, etc.? But also just in terms of security of keeping your assets in place so they could appreciate, as you may expect over time. That's the risk of, is anyone ever going to take it? And so knowing that everything's virtual, that we've seen a lot of attacks this year, we've rolled out a way to try to go from the beginning of a blockchain project, which is through investigating the code, the robustness, into some live on-chain checks that are kind of like recurring scans, into the final pieces, allowing individuals to purchase their own means of protection, to join a membership for reimbursement in case their assets are lost or stolen. And so that goes into some a new venture, but I think it complements very well this huge rise in the excitement of blockchain, DeFi during the course of this year. So that's a quick introduction, but I'm sure we could have some more. But very happy to be here and excited to talk. I'll keep things not too technical, of course. I don't think anyone's here for that, but happy to talk about just different perspectives, as well as we do see a lot of projects and could have a decent amount of speculation of what's up to come for next year.
Great. Robin O'Connell, if you joined earlier, I've already spoken. I've probably had 3 more cups of coffee. So I'm coming on. I don't know if I'm coming up or coming down, but my hair is a little bit drier than it was at this morning. Great to be back. My understanding is that this is a conversation, or to ask Daryl questions about CertiK, and I'd love to hear more actually on the Daryl, if you're cool with this, on the insurance product that you just mentioned. I understand in terms of what you guys are doing to vet and certify the tokens themselves and the cryptocurrency itself. If you could actually before you go into the insurance, if you wouldn't mind, just at a high level, just assume that not everybody totally is that sophisticated on the on the technical aspects of cryptocurrency, but just at a really high level, like how would you explain what you do to, I don't know, your parents, as an example?
Yeah. Really good question. But there really isn't too much that you need to know into the code side. So in terms of just the process of, I guess, checking to see that code is secure, there's a lot of, it's like a spectrum of how robust of the check you're going to do. So there's some tools you could just run and you try to figure that out. You try to just check the logic. If you want to go very robust, so the background of the starter company is the founders are both professors. One is the computer science department chair at Yale. Another one is he got his PhD under that professor, but is now a professor at Columbia. They both focus on hyper secure software, and their technologies were used in DARPA and the military for weaponry, or just the software associated with hardware. And so it's called formal verification. Really what that is you use a mathematical proof to represent what the code can do, but more importantly is what it cannot do. If you prove that it is impossible for the code to do something that's not supposed to do, because you've just run all the variables, all the numbers, and it just doesn't ever, it's never a negative number, for instance, it's always positive, then you've just eliminated a sector of an attack. And so that's been primarily used, as mentioned, like DARPA, drones, NASA used it on the Mars rover. But blockchain, even though it's pure software, it's extremely important because it's a means of value. and it's open source. So there's infinite time for the hackers to try to break it. Now, the best way to protect against it is mathematically make it impossible. The central language that's used across the world is math, and it's consistent across whether you even speak the same language or not. And so if the code proves that it's not mathematically possible, then you should be good to go. And so that's really the approach where we've come in. And so we are a part of the Universal Protocol Alliance. We've done the formal verification for a lot of the Universal Protocol tokens to make sure that those tokens themselves are secure. There isn't this attack vector that may be present for other projects. And so that's particularly important because it's stablecoin based. Assets, hard assets, physical assets are backing these virtual ledgers of counts of tokens. And so for that reason, you don't want the count to be off. You don't want someone to be able to print new ones and then redeem it somewhere, and there's some sort of inconsistency among the numbers. And so things like that, the more mission critical applications have been seeking our service, and we've been able to provide that as the first part of certification to bring on the confidence that the code truly does work.
Perfect. And just so people, you mentioned the Universal Protocol Alliance. I'll sort of give a description of what I see it as, and then if you wouldn't mind, kind of from your perspective. But I see it as sort of a token foundry made up of different players in the ecosystem. So Uphold is a member, Certica is a member, Ledger is a member, Bittrex is a member, and I think there are a few others. And the idea there is that this foundry can create new digital assets with the idea that eventually everything can be digitized. Were you involved in any of the recent UP tokens that came out? I'm thinking about the gold and the
and carbon. Yes, yeah, exactly. I think part of this group of entities, just leading companies across the various sectors and coming together, is to open up the doors for global adoption in this way, where each individual entity might have its own specialized area. So Ledger for storage, for instance, very, very private, secure storage. On our side would be for the robustness of the source code, so very, very correct source code. And then you'd have Uphold on the side of the currency, the exchange. You have Bittrex there as well. It really is a group of members coming in together to try to commit for the greater blockchain space of the creation of Token Foundry, and like you mentioned, but just bringing on board more and more individuals to be able to benefit from this ecosystem and have use cases among it. So it does not just become solely currencies. So as mentioned, gold is something that there are tokens of, as well as carbon itself. So the ability to own the offsetting of carbon, a unit to measure that, given that it's becoming more and more hot as an area of an investment, to determine that as time progresses, people are going to be more and more conscious about what's happening in the environment. You see a lot of the Fortune 500s, a lot of these organizations trying to shift and neutralize the carbon footprint. And so is there an opportunity there as an investment to own it now? And as more companies try to seek this, then the demand may appreciate the value of the token.
Fantastic. And then maybe now shifting back to the insurance product that you were describing, that sounds pretty interesting, because obviously, at the core of what you do in certifying these tokens is giving a level of trust and a stamp of approval that the math has been done on it to check to make sure that it's rock solid. Can you explain a little bit about your shift there, or I guess extension of that service to because everybody, I think that's a great thing. People are holding digital assets on centralized wallets, as an example, decentralized wallets. Does it cover both? Can you just speak to that? That would be great.
Yep. So really, this came about from our clients originally as an ask. So a lot of them would say, you could do the audits. That's all pre-deployment. That's essentially before the game starts, before you go live, can you check against things? But then their question would be, now we're live. Is there anything you could do there? And so on our front, when the code is out there, as smart contracts are, it's just going to be running, and it's very hard to modify. And so we extended our promise on the security side to really try to encompass this end-to-end lifecycle, where you could think about this alternative to insurance as a decentralized model of funds that are used to reimburse in case anything does happen that's unexpected, that's voted upon. So it's actually a decentralized discretionary insurance-like system where when something happens in the space, the individuals who are part of the membership are able to submit a claim proposal. That claim proposal gets voted on by the entire network. So in that front, they actually need to pay a fee to submit the proposal to mitigate the risk that they're trying to game the system. And with the fee is paid out directly to anyone who participates in the vote. It is decentralized. There is no middleman. So we are not collecting any of this. That's a different role than anybody else. But the voters are actually members that are providing collateral. So what's happening is that there are individuals that own our token who are seeking yield. And in that front, they're putting our token as a staked asset to serve as collateral that becomes a larger and larger pool. Any of the individuals who are seeking protection could purchase protection, and there's an allocation from the collateral pool to serve as a one-to-one, just set aside, reserved for the individuals seeking protection. So the collateral pool itself will always be liquid, and the protection that's sold on top of it is not able to be sold unless the money exists in the collateral pool. So there isn't a chance of default of, hey, where's my money for the claim? It's all only sold when there is availability. And what happens is that a decentralized vote, if something does happen, there's analysis from security providers to make sure that this hack is true or that it's trackable on the blockchain. And really the promise of what it seeks to protect is if money, if crypto is truly stolen and taken away, whether it's through a hack or a code malfunction. It won't protect things like, oh, I lost my private key, or my employee ran away with the assets, things like that, because those aren't provable. It won't protect a SIM swap of, hey, somebody just impersonated me, was able to get my password and take my money. Those aren't provable on blockchain. So really the whole idea of the decentralized vote is that it should protect things that are truly provable on the blockchain, that are truly means of money being taken away, as opposed to areas for people to play the system and profit from this reimbursement system. As reimbursement systems are not meant to be profited from; they're really meant to mitigate risk.
So can I jump in here, Daryl? I think what you're doing is really important, and I see the number of clients that you have, and the amount of assets that you are protecting is in excess of several $1 billion, which is really impressive. I think this problem will continue to need a solution, and it'll be interesting to get you back in the next event and see and dive deep into this a little bit more. So thank you. I do have one question for Robin from the audience that's been pending since this morning. Robin, are you ready? And then we can, that'll be the only question today.
I'll do my best.
All right, there you go. Thank you, Daryl. Let's see, Mr. BXRP, you have a question.
Thank you, Karim. Hey, Robin, this message was, this question was for you from this morning, from when you were on this morning.
Oh, yeah.
And one of the things that we're hearing, specifically, I think it came out of the U.S. Treasury, is the concern for people holding their digital assets in cold storage. And what I would imagine is going to happen is even the most hardcore digital asset owners and investors are going to have to pull out of their cold storage and find their find their way to exchanges. Even though many of them may not want to, because there's a lot of the not my keys, not my crypto crowd.
Right.
But one of the questions that I had for you, which I've talked to JP about in the past, is enacting some sort of a vault feature like Coinbase has, where there's multiple steps to get your digital assets out of your wallet, which makes a user feel more comfortable, like it's an extra layer of security. And one of the things JP had said to me was, so you want me to keep you away from your digital assets? And my answer to him was, yes, I want to be protected because it's just an added layer. And I think that with more people probably coming to exchanges in the future, I think that would be very helpful. Do you see that as something you guys might add? And then my second question was going to be, can you now, or do you see in the future the ability to use a security key on Uphold?
Yeah, great questions. In fact, I was on a strategy call yesterday, and you must have been in JP's head or something. In terms of that, we discussed that very subject. So yeah, I think first of all, it's we listen to our customers. That sounds cliche, but we're trying to figure out. It's a rapidly evolving market, and you're trying to balance all of these different needs from, like you said, sort of on one end of the spectrum is, not my keys, not my crypto, right?
Right.
The total decentralized, yet on the totally other end of the extreme, we're trying to bring on, new users who maybe don't even want to deal with their keys because they just want the simplest user experience possible. So we're trying to kind of navigate amongst that set, and obviously we're not totally on the spectrum of just we're on the spectrum of ease, but we also cater to folks like yourself who have been in blockchain, and these issues are really important. I'd also say that with the advent of DeFi and everything that's happening there, that's a driver for us too, to make sure that we have a solution in place that makes it easy for somebody to transition from Uphold into DeFi and access and so forth. So that was the long answer. Short answer is yes. We are looking at doing the very thing that you mentioned.
Awesome. And how about the security key? Can you use a security key now on Uphold? And if not, is that something you might add in the future as well?
So not now, but yes, we're looking at that, adding that in the future as well.
Fantastic. I'm a big fan. Love what you guys do, and appreciate that you guys take these types of questions in these formats. Thank you so much.
Cool. Thank you.
Thank you, Mr. BXP, Robin. Daryl, I think that was a very relevant question to some of the things that you were talking about as well in terms of security and understanding where that's going to go forward. I'd like to thank you all again for your time to be here today. We're going to continue to move on to the next session. Stay with us if you'd like. We'd love. It's going to be interesting. We're going to bring on Christine Bergiano and Matthew Culkin, and Christine is building a company called CrossTower, doing wonderful things out there, making a lot of progress, and she's going to be touching on a very, very interesting topic of what the administration is doing in terms of helping us all out in the economy and the environment. So, Christine, thank you very much. Matt, thank you for joining us today. I'm going to let you introduce yourselves, then you can go through the fireside chat. We will running slightly late, so I'm going to ask your indulgence as we try and get back on time. So I'll pop back in a little bit just to give you a reminder. Thank you.
Hello. Hi. Matthew, can you hear me?
Yeah. Hey, Kristen.
How are you? Good to see you.
Good to see you.
Thanks, Karim, for organizing this. This is wonderful. You always put together such interesting panels. And I'm so delighted that Matt can join me. I'll let Matt introduce himself. But before we start, I want to tell you a little bit about what we're going to talk about. This is an exciting time when you have a change in administration, because they can bring different ideas, policies, and we already have enough change in the digital asset space. So it'll be very interesting to see what the Biden administration brings to our already crazy industry. We'll be talking a little bit about new legislation that's been introduced, possibly what we might see. We'll be talking about stable coins, CBDCs, and other interesting topics that Matt might want to bring up. We're very lucky to have Matt. He's an expert. I'll let him introduce himself. He's an expert, former regulator, and a truly nice guy. Matt, you want to go ahead and...
hold on a second, Kristen. I want to hear a little bit about you, your success, CrossTower, all the wonderful things that you've accomplished in the last 2 months. I know there are millions of dollars floating around and all these wonderful things that you're doing. So please, before you met. I didn't want to throw you
No,
off.
thanks,
very
Kareem. I was going to do the same thing. So thanks for beating me to it.
Thank you, guys. That's very sweet of you. Yeah, I'm very proud of the progress that Crosstower has made. We have successfully launched our digital asset exchange in Bermuda and in the United States. We're introducing margin in Bermuda, and we're introducing Crosstower Capital Markets. Crosstower Capital Markets is going to have a variety of different products, and we're not ready to fully announce, but it's going to have lending and structured products, funds. It'll be a very exciting step 2 for Crosstower's development. We've got a number of deals that we'll be announcing soon. Very happy with the progress. So thanks. A little bit about my background in case you don't know me. I'm president and co-founder of Crosstower. We started last year, so this is tremendous progress in 1 year. I have a background as a lawyer, a regulatory lawyer, a structured products lawyer, a hedge fund attorney, and I started my career on the floor of the Merrill Lynch trading floor in equity and credit derivatives on the business side. So it's been quite a role. I also started the Digital Asset Regulatory Legal Alliance, DARLA, which I think is very important if you are an in-house counsel and you are active in the digital asset space. Please come join us. We like to discuss policy, regulations, legislation globally, so we can really kind of stay abreast. Now, I'll turn it over to Matthew, who's amazing.
Well, Kristen, I'll start by echoing the importance for, particularly on the legal and compliance side, for industry to come together and work together and bring a voice to Washington. So I'm Matt Culkin. Nice to meet all of you. I'm a partner at a law firm called Steptoe & Johnson. We are a Washington-based but global law firm, and I co-chair our financial services group. I mostly focus on